Bitcoin just dropped significantly, and while panic spreads across crypto Twitter, one man remains completely unfazed. Michael Saylor, the billionaire CEO who's bet his entire company on Bitcoin, has something to say about this market decline that might completely change your perspective. In the next 13 minutes, I'm going to break down exactly what's happening in today's Bitcoin market, why Saylor isn't worried, and what this could mean for your investment strategy. But before we dive in, if you want to stay ahead of the crypto curve and never miss crucial market insights like these, smash that subscribe button and hit the notification bell. And if you find this analysis valuable, give this video a thumbs up and share it with anyone who needs clarity in this chaotic market. Trust me, you'll want to stick around for this one. Let's start with what actually happened today. Bitcoin experienced a sharp decline, dropping from its recent consolidation range and triggering widespread concern among investors. The price action caught many off guard, especially those who were expecting continued momentum following Bitcoin's recent rally. Now here's where it gets interesting. The decline wasn't happening in a vacuum. We're seeing several factors converging simultaneously. First, there's been significant profit taking from short-term holders who entered positions during the recent dip. Second, macroeconomic pressures are intensifying, with traditional markets showing volatility as investors digest new economic data. Third, we're witnessing what appears to be coordinated selling pressure, possibly from over-leveraged traders getting liquidated. But here's what most people are missing. The decline today isn't fundamentally different from the dozens of corrections Bitcoin has experienced throughout its history. In fact, if you zoom out on the chart, this looks like a relatively normal retracement within a larger bullish structure. The mainstream media, of course, is having a field day. Headlines screaming about Bitcoin's crash, warnings about the dangers of crypto, and the usual parade of skeptics saying, "I told you so." But while the noise gets louder, one voice stands out for its remarkable consistency and conviction. For those who might not be familiar, Michael Saylor is the co-founder and executive chairman of MicroStrategy, a business intelligence company. But what makes him truly remarkable in the crypto space is his unwavering conviction in Bitcoin as a superior store of value. Since August 2020, Saylor has transformed MicroStrategy into what's essentially a Bitcoin treasury company. Under his leadership, MicroStrategy has accumulated over 190,000 Bitcoin, making it one of the largest corporate holders of the cryptocurrency. That's billions of dollars worth of Bitcoin on the company's balance sheet. Now think about that for a moment. This isn't some random crypto influencer on Twitter making bold predictions with no skin in the game. This is a billionaire CEO who has literally bet his company's future on Bitcoin. When MicroStrategy announces Bitcoin purchases, markets pay attention. When Saylor speaks about Bitcoin, institutional investors listen. But what makes Saylor's perspective particularly valuable during market declines like today's is his proven ability to maintain conviction through volatility. He's watched his Bitcoin holdings swing by hundreds of millions of dollars in value, both up and down, and his strategy has remained consistent: accumulate and hold. Saylor doesn't just own Bitcoin personally or through his company. He's become one of the most articulate advocates for Bitcoin as digital property, as a solution to monetary debasement, and as the ultimate long-term store of value. His educational efforts have helped countless investors understand Bitcoin beyond the price action. So what does Michael Saylor say about days like today? His message is remarkably consistent and grounded in a fundamental understanding of what Bitcoin actually is. Saylor views Bitcoin volatility through a completely different lens than most market participants. While traders panic over daily price movements, Saylor focuses on what he calls the long-term thermodynamic properties of Bitcoin. In his view, short-term price fluctuations are simply noise in a much larger signal. He's often compared Bitcoin to digital real estate in cyberspace. Think about that analogy for a moment. If you owned prime property in Manhattan, would you panic and sell because property values fluctuated 5 or 10% in a month? Of course not. You'd recognize that real estate is a long-term store of value, and short-term price movements are irrelevant to its fundamental utility. Saylor applies this same logic to Bitcoin. He's repeatedly stated that he views Bitcoin as the apex property of the digital realm, the most secure, most decentralized, and most scarce digital asset in existence. From this perspective, today's decline isn't a crisis, it's an opportunity. Now, if you're getting value from this analysis and want to understand not just what's happening in crypto, but why it's happening, make sure you're subscribed to this channel. We break down complex market movements into actionable insights. Hit that like button if you appreciate the deep dive, and share this with anyone who needs a rational perspective on today's Bitcoin action. Let's talk about the bigger picture that Michael Saylor consistently emphasizes, because this is where his perspective becomes truly powerful during market declines. Saylor fundamentally believes we're living through a period of unprecedented monetary expansion. Central banks around the world are creating money at rates never before seen in human history. In his analysis, this makes holding traditional currency a losing proposition over time. The purchasing power of fiat money erodes as more units are created. Bitcoin, with its fixed supply of 21 million coins, represents the opposite. It's the hardest money ever created, immune to inflation, confiscation, and debasement. Saylor calls it digital energy and views it as a way to store economic value across time and space more efficiently than any previous technology. From this framework, the question isn't whether Bitcoin will go up or down tomorrow, next week, or next month. The question is, where do you want to store your wealth over the next decade as fiat currencies continue to lose purchasing power? Saylor has said repeatedly that he expects Bitcoin to continue experiencing volatility. He's not surprised by days like today. In fact, he's gone on record saying he expects 50% corrections to occur periodically. But he also believes that over longer time horizons, Bitcoin will continue to appreciate against fiat currencies because of its superior monetary properties. What's particularly interesting is how Saylor frames risk. While most people view Bitcoin's price volatility as the primary risk, Saylor argues that the real risk is holding depreciating fiat currency. He flips the conventional wisdom on its head. It's not risky to own Bitcoin, it's risky not to own Bitcoin. Now let's talk about what's happening beyond the retail panic. While individual investors might be selling in fear during today's decline, institutional behavior tells a different story. MicroStrategy, under Saylor's leadership, has a well-documented strategy of buying Bitcoin during both rallies and corrections. They're dollar cost averaging at a corporate scale, continuously adding to their position regardless of short-term price action. This isn't panic-driven trading, it's systematic accumulation based on long-term conviction. And MicroStrategy isn't alone anymore. Since Saylor blazed the trail, we've seen other corporations, family offices, and institutional investors begin allocating to Bitcoin. The recent approval of Bitcoin ETFs has opened the floodgates for institutional capital that couldn't previously access the asset class easily. Here's what's fascinating. Institutional investors typically have longer time horizons than retail traders. They're not looking to make a quick profit on a swing trade. They're allocating a portion of their portfolio to Bitcoin as a strategic long-term hold, similar to how they might allocate to gold or real estate. During market declines like today's, these institutions aren't panicking. Many are likely viewing it as a better entry point or an opportunity to add to existing positions. This is exactly the mindset that Saylor embodies and advocates for. The data supports this too. On-chain analytics consistently show that long-term holders, wallets that haven't moved their Bitcoin in over a year, continue to accumulate during price dips. The Bitcoin is moving from weak hands to strong hands, from short-term speculators to long-term believers. So what can we learn from Michael Saylor's approach to today's Bitcoin market decline? Let me break down some practical takeaways that you can apply to your own investment strategy. First, zoom out. Don't make investment decisions based on daily price movements. Look at the 4-year cycles, the long-term trend, and the fundamental properties of the asset. Bitcoin has experienced numerous corrections of 20, 30, even 50% or more, and has consistently recovered to reach new all-time highs over longer time periods. Second, understand what you own. Saylor didn't just buy Bitcoin because he thought the price would go up. He spent hundreds of hours studying the technology, the monetary properties, the game theory, and the network effects. The more you understand why Bitcoin has value, the easier it becomes to hold through volatility. Third, think in terms of purchasing power, not dollar price. A Bitcoin is a Bitcoin. The question is whether you believe Bitcoin will preserve and grow purchasing power better than your alternatives over your investment time horizon. If the answer is yes, short-term dollar price becomes less relevant. Fourth, consider your position sizing and risk tolerance carefully. Saylor can weather extreme volatility because he's operating with a long-term corporate strategy. You need to invest at a level where you can emotionally handle the volatility without making panic decisions. Fifth, don't invest money you need in the short term. Saylor's strategy works because MicroStrategy isn't planning to sell their Bitcoin to make payroll next month. If you might need the money within a year or two, Bitcoin's volatility could be problematic. Today's Bitcoin decline is just another chapter in the ongoing story of the world's first truly scarce digital asset. While others panic, Michael Saylor's perspective reminds us to focus on fundamentals over noise, conviction over emotion, and long-term value over short-term price. If you found this analysis helpful, please subscribe to stay informed on future market movements and crypto insights. Smash that like button, share this video with fellow investors who need perspective during volatility, and drop a comment below with your thoughts on Saylor's strategy. Are you accumulating during this dip or sitting on the sidelines? Remember, the best investment decisions are made with knowledge, not fear. Stay rational, stay informed, and I'll see you in the next video.